Good day, Assalamualaikum, and welcome to International Finance Bulletin. I'm FATIN ALYA binti Zu, and today I will present an analysis on the influence of Bitcoin on the exchange rate variation in China and its effect on Malaysia. This analysis focuses on two currency pairs. The first one is Bitcoin against the Chinese yuan known as BTC CNY and Bitcoins against the Malaysian ringgit known as BTC MRR. And today, the discussion will cover about the key trends, regulatory factors, exchange rate movements, and the comparison between China and Malaysia from 2010 to early 2026. Bitcoin was created by Satoshi Nakamoto in 2008 as a decentralized digital currency free from central government control. Launched in 2009, it evolved from an obscure technological experiment into a globally recognized asset. The network introduced revolutionary blockchain technology with a capped supply of 21 million coins. And what is Bitcoin? Bitcoin is a cryptocurrency that allows transaction without relying fully on banks or traditional financial intermediaries. And in international finance, exchange rates are very important because they show the value of one currency against another one. And influence trade, investment, and capital flows. From 2022 to early 2026, the globally economy faced uncertainty due to post-pandemic recovery, inflation, interest rate changes, and geopolitical tension. This condition affected both traditional currencies and digital assets. Actually, Bitcoin was much more volatile than normal currencies, but it became increasingly important as an alternative investment asset. First, let us look at BTC CNY. From 2010 to 2017, BTC CNY showed gradual development and increased market participation. Bitcoin trading in China was still limited during the early year, but after 2013, trading activity increased as local cryptocurrency exchange expanded rapidly. During this period, China also became one of the world's largest Bitcoin mining hubs because of the lower electricity costs and large-scale mining operation. However, important between 2014 and 2016, when the People's Bank of China increased scrutiny on cryptocurrency exchanges as restrictions become clearer, investors shift to peer-to-peer and over-the-counter platform. In 2017, Bitcoin surged during the global ICO boom because of speculative demand and investor optimism. However, China's ban on ICOs and local exchanges caused true correction and pushed investors to offshore and OTC channels. From an exchange rate perspective, the rise in BTC CNY means that Bitcoin become more expensive in yuan terms as demand increased. So, from 2018 to 2021, BTC CNY moved through correction, consolidation, and then strong volatility. Then, during the COVID-19 pandemic, BTC CNY was sharply and become highly volatile as investors view Bitcoin as an alternative asset and a hedge against inflation, currency depreciation, and against uncertainty. At the same time, China still had strong influence in Bitcoin mining before the nationwide mining ban. When China declared the cryptocurrency transaction illegal and mining restrictions pushed miners to relocate to countries such as United States and Kazakhstan, BTC CNY liquidity shifted to offshore exchanges and OTC platforms. Then, in 2022 and 2023, BTC CNY declined as investors become more risk-averse due to globally uncertainty, including the Russia-Ukraine conflict and the broader market correction. By 2023, the market gradually stabilized as panic selling eased and investors adapted to China's regulatory environment. From 2024 to 2025, BTC CNY experienced strong upward momentum due to Bitcoin halving optimism, ETF-related confidence, and increasing institutional participation. The depreciation of the Chinese yuan also supported BTC CNY price surge because Bitcoin became more expensive that time when measured in yuan terms. However, in early 2026, BTC CNY corrected again due to profit taking, ETF outflow, leverage liquidation, and reduced buying momentum. Next, we move to Bitcoin against Malaysia ringgit. In 2017, Bitcoin started receiving more attention in Malaysia and BTC MRR increased during the global bull run. The investors began trading through local digital assets. Unlike China, Malaysia did not ban Bitcoin completely, but Bank Negara Malaysia adopted a cautious approach by focusing on anti-money laundering and counter-financing of terrorism requirements. BNM also reminded the public that digital currencies are not legal tender in Malaysia, At the same time, the Securities Commission Malaysia began developing a clearer framework for digital assets. During 2020 and 2021, Bitcoin against Malaysia ringgit rose strongly as Bitcoin became more popular among retail and institutional investors. Malaysia's more open regulatory environment allowed trading to continue through regulated platforms. The growth of fintech products and e-wallets also made Malaysians more familiar with digital finance. In 2022 and 2023, BTC-MRR faced market correction after the previous highs. Global uncertainty, including the COVID-19 pandemic and also the Russian-Ukraine conflict in China, made investors more cautious toward risky assets. However, by 2023, the Bitcoin market in Malaysia showed a sign of maturity supported by regulatory oversight, fintech development, and continued investor interest. From 2024 to 2025, BTC-MRR increased again after the Bitcoin halving. Institutional interest and ETF optimism further supported Bitcoin demand. Malaysia's digital asset framework continued to operate through regulated platforms under the Securities Commission Malaysia, making Bitcoin trading more structured for local investors. In early 2026, BTC-MRR experienced a correction after a strong surge in 2024 and 2025. This shows that BTC-MRR remains sensitive to both global Bitcoin price movements and the value of the Malaysian ringgit. By the way, when we're comparing BTC-CNY and BTC-MRR, both currency pairs were influenced by global Bitcoin cycles, and it's the same thing. Both increased during major bull markets such as 2017, 2020 to 2021, and 2024 to 2025. Both also experienced corrections during period of global uncertainty, especially in 2022 to 2023 and early 2026. However, the main difference is the regulatory environment. BTC-CNY was more affected by China's strict cryptocurrency restriction, mining ban, capital control concern, and yuan depreciation. In China, policy announcement often created sharp changes in the market sentiment and Bitcoin-related activity. In contrast, BTC-MRR was shaped by Malaysia's cautious but more open regulatory approach. Malaysia allowed digital asset activities to continue through regulated platforms under the Securities Commission Malaysia, as long as the investor followed the law. Therefore, BTC-MRR was more connected to retail participation, fintech development, regulated market access, and ringgit exchange rate movement. The movement of BTC-CNY can affect Malaysia indirectly because China is one of Malaysia's major trading partners. When the yuan weakens or China's financial market become uncertain, regional investor sentiment can also be affected. This may influence the Malaysian ringgit, capital flows, and confidence among investors in Malaysia. In conclusion, Bitcoin influenced exchange rate variation in both China and Malaysia, but the impact was different. In China, BTC-CNY was strongly affected by strict regulation, yuan movement, capital control concerns, and China's previous dominance in Bitcoin mining and trading. Then in Malaysia, BTC-MRR was shaped more by regulated digital asset adoption, fintech development, investor confidence, and ringgit movement. That concludes my analysis on the influence of Bitcoin on exchange rate variation in China and its effect on Malaysia. I'm ALYA Binti Zu, presenting for International Finance Bulletin. Thank you for watching. Assalamualaikum.